In this video, I'm going to show you how to read market structure. Hello traders, welcome to my channel. I have been getting a lot of questions from beginner traders about how to read market structure and understand how the market moves and maybe focus on the direction mainly. In this video, I'm going to break down step by step on how you can read market structure so that you can understand where the market is more likely to go. This is my personal experience, and this is I'm not trying to trade differently, but I'm trading the way I understand the market, and I'm showing you what works for me exactly. So if you follow my step by step, you will finally understand how market structure reads. Yeah, here on the gold chart, let me start on the H4. I've just noted down things that I consider most of the time before I look at anything on the chart. Let me delete everything. This is how I begin my market structure. This is a break of structure. I call this a break of structure. Whenever the body of the league breaks the wick of the candle that made the higher high, that's what I call the break of structure. And in that, I'll call this the lowest point in the league that led to the break of structure. I always mark those points because I do trade order blocks. So if the market breaks, of course, I just know that the market is bullish, it's moving up, it's in the upward direction. But if the mere fact that the market is moving up, it doesn't mean that we can't look for the sales. So I always, in the upward move, I can look for the sell in such a way that I'll always wait for a break of structure in another direction. And then if I see that, if I see a break of structure in a different direction, let me say this one. This sometimes people call it a change of character, but that's just a mere term. You can call it whatever you want. But whenever I see a break of structure, this is the league that led to the break of structure. But the mere fact that we have seen a change of character is a break of structure in the opposite direction. So it shows that we can as well look for sales, because some strategists say that maybe if you're in a bullish trend, you're supposed to look for buys only. But if you really understand how the market moves, you don't have to wait for you don't have to miss all these opportunities that are surfacing before the upward move. So I call this a break of structure, and there's in the market structure strategy, there's what we call a liquidity sweep. So most of the time, what I call a liquidity sweep, if the market, suppose we have something like this, let me see, suppose, let me get a blank page and see. Suppose we have something like this, the market has moved in this direction. I want to, no. So suppose the market has moved in that direction, it's continuing like this, and maybe it has formed some things like this. up. So in this league, I will always look for what we call a liquidity sweep. If the market, I look at it in such a way, in this way, that if this is a liquidity sweep, I call this liquidity. I call this liquidity. I call this liquidity. I want to explain how I call this liquidity. So in every big move, if the market breaks structure in this way, like this, and then for the market to continue moving upwards, it has to at least sweep one of the liquidity that rests around this corner. One of the liquidity that rests around, it has to sweep. It can either sweep this one, it can either sweep this one, it can either sweep this one, and before it takes the big move like this. So always take it like that, that the market will always sweep liquidity before it takes the big move. So let me show you here. So depending on this, on what I've drawn, if we look at this chart, we have liquidity around here. This is the liquidity we have. We have liquidity resting around here. We have liquidity resting around here. This is all liquidity, guys. Understand me. So for the market to continue moving up, at least it will take out one of the liquidity that rests around this area. And this is the liquidity around here, this is the liquidity around here. So what it did, it came, it swept this liquidity, this one, and then it continued moving up. So always the market, before it breaks another structure, it has to first sweep some of the liquidity that is resting around this point. So keep it like that. I'm going to show you how I read market structure. And in another way, there is also this thing, if we have something like this, something like this, maybe this league forms something like this, something like this. So for me to call this a change of character around this point, the market has to do like this, and moves in that direction. That's what I call a change of character. But otherwise, if it's just if it's just a simple break like this, I call this a sweep of liquidity. It has to break this area for me to confirm that it's a change of character, that we are finally moving in the opposite direction. It has to first break this area, and then it also gives me the change of character in the opposite direction. That's what I call this a change of character. For this, I'll confirm that the market is finally moving in the opposite direction. But if I only see something like this, I call this is 99% a sweep of liquidity for the market, guys, to move in the opposite direction. So let me show you some examples. At least now you know how to read market structure. At least we can look at the charts and see. So look, the market break structure, it came, it swept the liquidity that was resting here. So it gave me a second break around this area. For this, I'll confirm that the market has changed direction and is moving in the opposite direction. So I'll be looking for sales until I see another break of structure in the opposite direction. Here it moved like this. So if I see something like this, automatically I'll look for sales around 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 these areas. I'll combine a lot of things, not just market structure. But if it shows me something like this, then I'll combine a lot of things and then I try to buy in the opposite direction. So what I've been telling you, that the market will sweep this liquidity, will sweep the liquidity that is resting also around here, and then it moves in the opposite direction. So, and here on this leak, the market has broken direction, but remember we say that the market will always sweep liquidity before it moves up. It moves up, so it came here, broke around this point, and then after sweeping the liquidity that is resting around this area, it continued moving in opposite direction. And some people will call this a change of character, so that they will just start buying around this point and then they target this liquidity that is resting here, but I don't call it like that. So that's another example. Let's move. I'll show you everything and it's confirmed. This is another leak. The market broke structure. We see where is liquidity resting. Liquidity is resting around this point, and around this point we see liquidity resting. So I told you that the market will always sweep liquidity before it moves up. So the market came, it swept this liquidity. After sweeping the liquidity, it moved up, guys. So for the market, we have to wait for the market to change direction. My confirmation that the market has changed direction, I've told you that is moving like this, like this, like this, like this. If we have these small leaks like this, my confirmation that the market has swept liquidity, it will come, the market has changed direction, it will come, sweep this liquidity. If it wants to move in opposite direction, it will show me that it's really going in this direction. So that's the principle that I use when reading market structure, so that it can give me exactly how the market moves. Please guys, thank you for watching. Kindly subscribe to my channel. I'll be sharing my daily analysis and my daily everything, my daily statistics. I'll be showing you everything you need to know to learn forex and any other trading instrument. Thank you.